Stock Exchange, where Alan Valdez, Director of Floor Operations at Silverbear, is standing by with more. And Alan, thanks so much for being with us today.
Thanks for having me, Alexis.
So the FTSE in the UK has recovered nearly all of its losses. In terms of the Brexit's U.S. equity impact, you think we're out of the woods here?
Well, we're out of the woods for this week, that's for sure. But, you're right. Last week we were down $2 trillion in equity money around the world. Today we're up about $2.5 trillion. So, it's just a crazy week. But what your first guest said was 100% right. We're the best house in the worst neighborhood. That's what's pushing down the bonds and getting money into the market here. And I think that's going to continue. You look at Europe, you look at Switzerland. Every bond is trading in negative territory. You look what's going on in Italy. So, it's just a mess over there, and it's not going to get any better, I don't think, anytime soon. So they're all coming here as safe haven.
Jared, you had something to add for Alan?
Sure. What do you think is going to happen in terms of oil in this market? It started out the day down. Looks like it's consolidating, ends the day up. Where is crude oil going right now?
Well, I think crude oil is going to hover in here. I don't see it really jumping up too much because I think demand's going to slow up in Europe. Demand's going to stay hot here, but I think it's just going to trade in this range right here. I don't think you'll see much of a play in that. I think you'll see a little more play in gold. I think you'll see gold bounce a little higher as the year goes on. But basically, I think if you're going to be in anything, you want to be in American equities that trade right here, the blue chips. I think they're the safest bet to have right now.
Hi, Alan. It's Bobby Rebell here. We came into this week with so much fear and anxiety and worries, and yet the tone changed so much over the course of the week and now heading into the holiday. Can you talk a little bit about what the mood was like down at the exchange with this kind of change in the days?
Well, I think you have to be bipolar to work down here because on Monday you were suicidal. You thought this is it. This is going to continue for the rest of the summer. And then by Wednesday you were saying, hey, maybe I'll take a long weekend and not come in on Tuesday. So I think it's going to stay this way. I think you're going to see volatility. And the mood down here, I always felt, and I really did, that the BRICS, that would last as long as the news cycle lasts. It's just too far down the road to see what's really going to happen. 2 years down the road before they unwind this whole thing. Traders think in seconds. They don't think 2 years down the road. So I never saw this as a big problem. I do think if that was the earthquake, we'll see aftershocks for quite a while as things happen in Europe. But I think politically it's going to be more critical than anything else to the markets right now, especially to the American markets.
Alan, despite the gains that we saw in stocks this week, we're still seeing a risk-off trade with demand for bonds surging. The 30-year T-bond yield hit new all-time lows. What's going on there?
Well, yeah, I think you're looking at people, especially Europeans, coming in for a safe haven. Remember, like I said, most bonds in Europe, in Britain this week, they're trading negative. So I think a lot of guys are saying, hey, let me get in the 10-year at 1.3. I'll take that, or the 2-year, or the 30-year. So I think you're seeing that, even though it sounds crazy. 1.3 is a good deal right now, again, with the best house in the worst neighborhood. So I think that's the play you're seeing. And of course, for the Americans, that helps with especially the 10-year, that helps with your mortgage, your refinancing, because that's all predicated to what the 10-year trades at. So you're going to see lower interest rates, which again puts the Feds in a box. I don't see them raising interest rates anytime soon.
Do you agree with the camp that says till 2018 we have to wait?
I don't know about 2018, but I think you'll go probably to maybe January, February. If you see any rate, so much depends on what happens after the election, who gets elected. So we got a volatile year coming up here, but I think you're not going to see any raise this year at all.
All right, Alan Valdez, thanks so much. Enjoy the July 4th weekend.
Thanks a lot. Have a safe one.
You too. Thanks.